Hey, Paul Mauro here. It's Monday morning, right? And it's time for you to get your weekly smart financial start for the week. There's something I want you to pay attention to this week that's super important. It's the $25 million 401k ripoff. I want you to pay attention to this because it's coming right at you if you're an employee at a company. Now, I think if you have your own IRA, you're going to be immune from this. If you've got your own SEP, you're going to be immune from this. However, if you're participating in a 401k plan, a 403b plan, a 457 plan, these are employer-sponsored retirement plans. Under the current administration, which change over as in January of 2025, and I'm talking to you right now, the current administration is very friendly to a particular industry called private equity. Now, there's a lot of things that you can invest in your 401k plan. You know that I'm a big fan of inexpensive index funds and ETFs. I even like some of the target date funds for those folks who don't want to pay any attention. But I will tell you that I believe in what Warren Buffett believes, that if you don't know what it's all about, don't touch it. One of the things that is in motion is the Trump administration is pushing to approve private equity investments in your 401k. Now, let me explain to you what private equity is. Private equity is a form of investing that has a very long holding period. Now, having had 50 years of experience in the financial practice, I know private equity investors, I've worked with them. It's not unusual for them to make an investment and not expect a return for 10 years. Now, why? They're very highly risk-oriented. Private equity is for people who can afford to lose the money. Private equity is also the kind of investment where even the best private equity people will tell you they don't expect to win 100% of the time. They're going to invest money in 5 companies. They're going to lose money on 3 of those companies. If they win on the 2 that they win a lot, now this is great for them. And in the past, you could not buy private equity investments unless you were an accredited investor, you had over $1 million, you had a lot of cash to lose, advisors had to go through hoops to get you into these private equity things. I believe that the $25 trillion sitting in 401k plans is the current target of the private equity people to get your money into their accounts so they can deploy it out in the world. Now, I don't think these people are bad people. I don't think that this is illegal, immoral, or whatever. I think it's inappropriate. I think for most 401k savers, they are hardworking people. You're doing your 40 hours a week. You're putting away your 15% in your retirement fund. The last thing that you want to hear about are long-term, illiquid, high-risk investments. And let me say it again. When I get to the end of this, I'm going to give you a couple of guide points on the kind of things you put in your 401k plan. And I will tell you, private equity is not one of the ones that's on there. So this current administration is pushing hard right now, and we're going to be calling this the $1 trillion ripoff, because if they can go and pillage 401k plans, and I will tell you, most of you will just click the button and invest. You won't even really be thinking about what it is. You won't be researching what private equity is. You won't be understanding what it is. And shame on the employers that allow this into their 401k plans, because they're responsible for putting investments in there that are appropriate for every investor, from the person that's a clerk who put in their first $10 to the person that's an executive that's putting in the maximum. Your 401k administrator is responsible for this. So I'm very negative about this. I think if it comes up for you this week, you should say no. I think put your money into the things that you understand, or at least you have a comfort level that they're liquid, that they're lower risk, that they're diversified. That is the opposite of private equity. So your 401k is in danger. This is a $25 trillion potential ripoff, right? They're looking at your money as a way for them to make money. So I want you to pay attention to the things that are in your 401k plan. And I will tell you, the last thing I want you to do is check the box on private equity. So here's the things that you should have. In every 401k plan, they are required to have a diversified basket of investments. That includes some stocks, some bonds, some cash accounts, some money markets, and some target date funds. A target date fund just means that when you're young, there's more in equities, and as you age, it changes your allocation automatically. Less equities, more fixed income. Less equities, more fixed income. And so I think that for those of you that are on autopilot, I like target date funds. I know you pay an extra fee for them. It's like having a mini manager on your side. That's fine. So when you look at your allocation, here's a guidepost. If you're 50, you should be in about a 50-50 portfolio. It's 100 minus your age equals the amount in equities. So if you're 60, it's 100 minus 60 is 40% in equities. If you're 30, 100 minus 30 is 70% in equities. You could do this on your own. You don't need to pay a target fund if you don't want to, but you should have money in equities. That's U.S. companies, maybe some foreign companies in stock. I think 4 or 5% of your portfolio in alternatives that look like a real estate fund or something, that's fine. However, I would stay far away, I would run away from anything that looks like private equity in your 401k plan. I think it's the beginning of a very big potential disappointment for people who want to retire and they figure out that their private equity investments are not mature yet and they can't get at them due to illiquidity. All right, that is one of the reasons I want you to stay in touch with us. Go ahead and subscribe to our channel, follow us on YouTube and all that sort of thing, and Facebook. Stick with us and we'll keep you up to date on what's happening with your money, because keeping away from risky investments is one of the things that we're going to be talking about at our big economic conference in September at the Marriott Hotel in Newton, Massachusetts on September 25th. And we have free admission for the first 100 people who sign up through our website to go to that meeting. It's just going to be a couple hours at night from 6 to 8 o'clock at night. We'll have some guest speakers. Some people will pay a fee to go. However, among our loyal subscribers, we're going to allow the first 100 of you to sign up and go to that for free. Getting more information about your money and staying away from dangerous investments is just part of the art of being smart. I'll see you in September at our live event. I'm Mauro.